Welcome back, XRP community. We have breaking developments out of the United States, and this one could change the landscape for cryptocurrencies forever. Former President Donald Trump has proposed eliminating capital gains taxes on cryptocurrencies and US-based tokens like XRP. This is not just a minor adjustment. It is a seismic shift that could remove one of the biggest barriers standing in the way of mainstream adoption, particularly for institutions and banks that have been hesitant due to the tax implications of frequent transactions. As of today, XRP is trading around $2.92, showing a sharp recovery from $2.77 earlier in the day. Bitcoin has pushed past $112,000 with a 0.7% gain, while Ethereum remains steady. The broader market is showing recoveries across the board, with altcoins leading some of the gains. Tokens like Dogecoin and Hype are up over 7%, signaling that money is beginning to rotate into riskier assets. This comes at a time when Bitcoin dominance is weakening, and analysts are expecting a further decline in the fourth quarter. If Bitcoin dominance falls, capital will naturally flow into altcoins like XRP, XLM, XDC, and others in the ISO 20022 ecosystem. The context for Trump's proposal is critical. On October 17th, less than 10 days from now, the Federal Reserve is expected to cut interest rates. Markets already price in a 100% probability of this cut, which explains the rally we are seeing across crypto. Rate cuts typically inject liquidity into markets, and that liquidity often finds its way into risk assets, including digital currencies. But add Trump's proposal on top of this, and you have the potential for a perfect storm. Lower rates combined with tax-free gains could ignite a wave of institutional and retail adoption unlike anything the crypto space has seen. For XRP in particular, the implications are massive. Every XRP transaction settles instantly, and each settlement could, under current rules, generate taxable events for institutions. Imagine banks using XRP to settle millions of transactions daily and having to record capital gains or losses for each one. It is an administrative nightmare and one of the reasons why adoption in the United States has been slower than expected. If Trump's proposal becomes law, this burden disappears. Banks and financial institutions could move liquidity seamlessly across borders without the friction of constant tax reporting. That single change could accelerate adoption by orders of magnitude. It is also worth noting that this is not Trump's first foray into crypto-related policy discussions. His son, Eric Trump, has also spoken positively about cryptocurrencies, projecting parabolic growth ahead. But this latest proposal is the most concrete and ambitious we have seen. Removing taxes on US-based cryptocurrencies aligns directly with Trump's populist economic strategy. Encourage innovation, keep capital inside the United States, and reduce government interference in financial markets. For XRP, which is the largest US-based crypto project by market capitalization, the benefits could be transformational. Liquidity flows are already reflecting heightened activity. Binance recently moved 64.4 million XRP worth nearly $186 million between internal wallets. These transfers suggest that demand for XRP liquidity is intensifying, possibly in preparation for increased institutional activity. Exchanges are positioning themselves to handle greater volumes, and such large-scale movements are often precursors to surges in market participation. The timing of these developments also intersects with broader macroeconomic shifts. The Federal Reserve's anticipated rate cut on October 17th is expected to be a catalyst, but could also trigger a sell-the-news reaction. Traders are already pushing prices higher in anticipation, and once the announcement is official, some profit-taking could occur. However, the bigger picture remains bullish. Rate cuts, combined with Trump's tax proposal and weakening Bitcoin dominance, create the kind of environment in which altcoins thrive. Consider what this could mean for XRP adoption. Banks that were hesitant due to compliance burdens would suddenly find XRP far more attractive. Financial institutions processing trillions in payments annually could begin settling significant portions of those payments through XRP. The ISO 20022 2.2 migration already sets the stage for interoperability, and removing tax burdens adds another incentive. XRP would no longer just be fast and cheap. It would also be frictionless from a regulatory perspective. That combination is powerful and could set XRP apart as the premier digital asset for real-world utility. The ripple effect extends beyond XRP. Other US-based crypto projects could also benefit, creating a surge of capital into domestic tokens. This could rebalance global crypto flows, encouraging capital to stay within the United States rather than flowing offshore. It would also put pressure on regulators and lawmakers to clarify their positions and align with policies that favor innovation over restriction. Of course, we must ask whether this proposal will actually become law. Trump is known for bold promises, and not all of them make it through the legislative process. But even the proposal itself signals a new direction in the political conversation around crypto. It shows that digital assets are now central to U.S. economic policy discussions. And if this proposal gains traction, whether through executive action or congressional support, it could redefine the playing field. For now, XRP holders should pay close attention. Price movements today are just a small reflection of the much larger forces at play. Trump's proposal, the Federal Reserve's looming decision, declining Bitcoin dominance, and heightened liquidity movements on exchanges all point to a market on the edge of transformation. We are entering a period where news headlines and political decisions can drive billions of dollars into or out of digital assets within hours. In conclusion, the combination of Trump's proposal to eliminate capital gains taxes on crypto, the upcoming Federal Reserve rate cuts, and shifting market dynamics creates a powerful narrative for XRP and the broader crypto market. This is not just about speculation anymore. It is about structural changes that could remove barriers and unlock adoption at scale. If implemented, this policy could make XRP one of the biggest beneficiaries, positioning it as the backbone of U.S. crypto payments in the years ahead. And before closing today's video, I want to remind you that we're also on Instagram. Over there, I post daily updates, quick news, and little curiosities from the XRP community that you might not always see here on YouTube. It's a great way to stay connected and to always be one step ahead with what's going on around Ripple and XRP. So if you haven't followed yet, I'd really recommend checking it out. Also, if you take a look at the links I've got in the bio, you'll find direct access to my book about XRP. You can grab it through Hotmart, or if you prefer, you can just search for it on Amazon and get it there. The book dives deeper into many of the things we talk about here, and it's a good resource if you want to keep learning and exploring more about this whole ecosystem. And for those of you who want to go even further and really be part of the inner circle, you can also become a channel member. By joining, you'll get early access to the videos I upload, so you'll be among the first to see the latest updates and analysis. Plus, you'll unlock some exclusive rewards designed only for members of the community. It's a simple way to support the channel, but also to make sure you're always ahead of the curve.